Let's also take a closer look at some of these changes, Harsh.
Yes, so let me start off, probably reiterate what Shrimi has said. The group of ministers has proposed a complete overhaul of both health and life insurance. In terms of the earlier rate, it was 18%. Now that falls to 0 is what is currently being considered. And therefore, the discount to the customer is going to be 18 rupees on 100 rupees of insurance, which is typically 15.2 odd percent in terms of the discount itself, which is the 18 rupee discount which used to get added on to the 100 rupees, to every 100 rupees of insurance premium that you used to pay as a customer. Now let me talk a little bit about how other countries tax insurance, and this is typically the tax rates that we're seeing, indirect tax rates on insurance, and a lot of this is more general or health insurance than others. This is broadly the rate. So India now standing ahead of a lot of these countries and more towards the developed nations, which generally have no tax outgo with regard to where insurance is concerned outside of the EU. A full exemption though means that there'll be some bit of input tax credit which the companies, the insurance companies currently avail but will not be able to avail. Say for example on commission payments, on consultancy fees, the GST that they paid was available as a credit to them, not available anymore, very, very likely, if this nil rate of tax is what is finalized. Of course, there will still be a huge discount when it comes to how customers look at it, but maybe the full 15% may not be passed through to the customer, and eventually there might be some bit of clawback there. But broadly, at least at this point, a full 15% pass through to the customer will likely be availed. Let me talk about how brokerages are viewing this. The GOM, or rather MK, seems to suggest that the GST exemptions on retail, health and life is a positive. The scope of the exemption currently, as of now, according to MK, remains unclear. What they're saying is that the GST exemption, the ITC, which is the input tax credit benefits, are also likely to go away, which is what we just spoke about. The price for the end consumer will certainly go down according to them. Just the quantum of it is going to be tough to currently estimate. The removal of ITC will bring into focus commissions and other non-salary OPEX on which GST is paid by the insurance company. And what they're saying is, therefore, it's difficult to determine the extent of the discount which will be provided to customers. But for now, the math seems to suggest a 15% discount.
All right, and that's what we're penciling in at this point in time. So thanks for helping us out with that entire outlook as to what this move could possibly mean, what exactly brokerages are also saying about it.